Are you wondering if you should buy a home now or wait until 2026? With high interest rates, rising rent, and low inventory, it's a tough call, but making the wrong move could cost you thousands. In this video, I'll break down what's really happening with rates, prices, and competition to help you figure out what makes the most sense for you. First, I want to go over what's happening in the market right now. Interest rates are hovering between 6.5% and 7% for most of 2025 so far. I should note that those interest rates are for what's considered well-qualified buyers. That means people with pretty good credit scores, things like that. Some lenders are offering slightly lower interest rates with buy downs or special programs. And of course, there's always the USDA loan, FHA, and other loan programs. The Federal Reserve has signaled potential cuts to interest rates, but it's slow and uncertain. Even if rates dip slightly, we're not expecting a big drop like we saw in 2020 or 2021. I'm pretty sure that era is probably over, at least for now. I wish that we would have 3% interest rates coming back at some point, but I don't foresee that in the near future. Now, for home prices, we're seeing that prices are still kind of sticky. They're not crashing, but growth is slower. Many sellers don't want to sell since they have low interest rates. The result is low inventory plus stable to rising prices in most markets. You're not likely to get a massive discount just by waiting. There's still not enough supply in many areas. Now, people are asking what 2026 might look like, and while it's hard to predict, here's what I think. Interest rates might come down a little, maybe into the low sixes if we're lucky, but don't expect anything dramatic. There could be more inventory next year, which means more homes to choose from. But home prices likely won't drop significantly, and with wages and costs where they are, I don't see affordability improving in a big way over the next year. Realistically, 2026 might look a lot like 2025, still challenging, still competitive, but with a few more opportunities for well-prepared buyers. Now, you need to note here that real estate is hyper-local. Some markets could be buyers' markets, or at least very favorable for buyers, and in other markets, it's like nothing has changed and homes are still selling after a few days. What I'm seeing in most markets I'm familiar with is it's still a seller's market, but things have definitely slowed down. If homes aren't priced right or aren't in good condition, they'll sit on the market for a while. And if you're not sure what you actually qualify for, grab my free affordability calculator on my website, workwithdang.com. It'll help you get a clearer picture of what your payment could look like based on current rates. I can help you find a real estate agent in your area. There's more information on my website. Now, I want to give you a few reasons why waiting to buy a home might not help. The first is interest rates might go down, or they might not. But if they do, competition could increase fast. So basically what that means is a lot of people have been waiting for interest rates to go down because then their affordability opens up a bit. So the theory is that once interest rates go down, that will create more buyers going into the market and potentially more competition. Now, the counterpoint to that is that some of those buyers will need to sell their home. So it could be that there isn't a huge rush, but it's hard to say. And again, real estate is hyper-local, so it's really going to depend market by market. Another reason why waiting might not help is rent keeps rising in most areas. At a national level, rents were 3.5% higher in March than at the same time last year. The average rent nationally is around $1,800. So 3.5% of $1,800 is about $63. Not a huge jump, but with everything else in life getting so expensive, rising rent prices aren't helping affordability for people. So bottom line, maybe it makes sense to get out of that renting cycle if you can and lock in a mortgage payment. Another reason why waiting might not help is real estate is a long-term investment. You don't need to time the bottom. Historically, homes appreciate about 3 to 5% each year. So in theory, if you buy now, in 10 years, your home value could be much higher than what you originally paid for it. Waiting 6 to 12 months may not improve affordability, especially if home prices rise faster than rates fall. Now, I would recommend that you check your local market since not all markets have rising home prices. Here's a quick breakdown of what this could look like. Let's say you're considering buying a home priced at $300,000 with a 3% down payment and an interest rate of 6.75%. So the loan amount will be $291,000. Your estimated monthly payment, just principal and interest, will be approximately $2,300. Now, suppose you decide to wait, anticipating a drop in interest rates to, we'll say, just about 6.25% next year, which is very possible. Interest rates could go down to the low sixes next year. However, during this time, home prices in your market increase by 5%. So the new home price of a $300,000 home in a year in this scenario would be $315,000. With 3% down, the loan amount would be $305,550. Your estimated monthly payment at 6.25% would still be approximately $2,300. So in this scenario, you really wouldn't be saving any money by waiting for interest rates to go down because while you were waiting, home prices went up. Again, I can't say this enough. Real estate is hyper-local, and especially right now, it seems like different markets are kind of in different places. So this may not be the case where you are. In this example, even Even though the interest rate has decreased, leading to potential savings, the increase in home prices offsets this benefit. Your monthly payment remains roughly the same due to the higher loan amount required for the more expensive home. So waiting for lower interest rates doesn't always result in lower monthly payments if home prices rise concurrently. It's essential to consider both interest rates and home price trends when deciding the optimal time to purchase a home. Now I want to talk about when waiting does make sense. So first and foremost, if you're not financially ready, that's a good reason to wait. That means your credit score needs some improvement, you don't have enough money saved for closing costs, and you have a high debt to income ratio. Also, if you're not sure where you'll be in the next 1 or 2 years, you might want to wait. If you're in a high-cost market where prices really are softening and time is on your side, that could be a good reason to wait. If you're paying off high-interest debt like credit cards, waiting could help you qualify for better loan terms later. If you're early in your savings journey and you don't want to deplete your emergency fund, running a little longer could be the smarter move. If you're planning to wait, make it intentional. Use the next 6 to 12 months to build savings, improve your credit, and track prices in the areas you're interested in. That way, when you're ready, you're not starting from scratch, you're ready to move. And while you're doing that, look into first-time homebuyer programs in your area. There are grants, down payment assistance programs, and other resources that could help make buying more affordable, especially if you're working on getting financially ready. With all that being said, how do you decide what's right for you? Well, I would ask myself a few questions. Can I comfortably afford a mortgage now, not just qualify, but actually afford it? Is my income and job stable? Will I stay in the home for at least 5 to 7 years? Do I have enough saved for closing costs and an emergency fund? If you answer yes to most of those, you're probably in a better position than you think. What I would encourage you to do is talk to a lender. Even if you wait to buy a home, you'll be better informed. I would also suggest you compare the monthly cost of buying versus renting and which one makes more financial sense. You can even use an online affordability calculator to see how changes in interest rates or home prices would affect your monthly payment. It's a simple way to test different scenarios and figure out what's realistic based on your budget. So should you buy now or wait until 2026? If you're financially ready, plan to stay put for a few years, and prices in your area are stable or rising, buying now could make sense. You can start building equity sooner. But if you're not quite financially ready or you're in a market where prices are softening, waiting and preparing could be the smarter move. Either way, the key is to be intentional. Don't just sit on the sidelines hoping things will get easier. Use this time to build a plan, get clarity, and move when the time is right for you. If you're leaning toward buying, check out this video about down payment assistance programs. If you're trying to figure out home buying in 2025, hit subscribe. I post new videos every week that break it all down.